Welcome guys, back to my channel, and today it's going to be an interesting one. We are starting a new playlist called Mindset Mondays, and each Monday, every so often, I'm going to be doing a video talking about psychology, traders' mindsets, how to get into the right one. And today we're going to start with a one which people don't really think about, even though trading psychology no one talks about much anyway, but this one especially. It's about you as an individual. Who are you? Who are you as an individual? Do you like risk? Do you like taking the risk? Do you over risk? Or are you risk averse? Do you not like the risk? And we need to talk about all these things because everyone has a different kind of control over this part. And in the end, you need to have the exact same control as everyone else, or you're gonna fail in this market. So let's get going and let's talk about this. Let's go. So to start off with, risk averse. So this is someone who, this is personally not me, but someone who prioritizes keeping their capital and not risking much. Therefore, they'll have lower gains, but they'll risk a lot less. And this is mainly due to the fact because they're scared to take a risk. It's in there. So for example, if you have an account, a £100 account, maybe you're only willing to risk £2 per trade, even though actually you could risk 3 or 4, because you know that you can manage your trade well. So most people are not this. I would say risk averse is very much someone who does not like to take the risks, which in trading doesn't happen much. But I know a lot of people on my Instagram, at Stop Loss Matters, if you want to join and just message me. They say like, oh, I'm scared to risk like more than like 0.3% or 1% or 0.4% of my account. And I'm like, well, hang on a sec, let's have a look, right? Are you making higher than 50 or 60% win rates? Yes. Okay, that's great. Are you managing your downside? Every time you have a losing trade, are you cutting your losses quick? Yes. It's like, well, why are you not putting those up to 1 or 1.5 or 2%? Because you could be having more gains. It's like, oh, well, I'm too risky. So the first thing you need to do, if you're in this type of person, you need to realize how much money you're willing to lose. If you have a big capital, if you've got a £1,000 account or £2,000 account, then there's no point risking £1 or £2 per trade because it's not going to gain compound or anything in a long period of time because it's such a short amount of risk you're taking. So you need to get that balance of where's the cutoff point, how much are you risking, how much are you wanting to risk, how much are you willing to give to the market if it goes wrong. For example, if you have a £1,000 account, are you willing to risk £8? And then you need to be able to get a nice balance if you're risk averse, because my friend from uni, he is very risk averse. He takes his time, but he's realized that he has to take a risk or he's going to get nowhere. So there's a very fine balance in this risk averse term. And if you're one of these, drop a message in the comments and say, yeah, I'm risk averse, I really don't like risking that. But is that because you don't have enough capital for your trading account and you're over risking, you're not actually able to lose that money? Because in that case, you should not be trading that account size. You should be able to literally get your account and go, right, if I lose this at the moment, I'm not going to be bankrupt, basically. It needs to be your comfort level. And then, as I said, when you're going through the trades, you're like, yeah, I get 78% win rates. Well, boost your amount of capital you're willing to risk to 1 or 2%, because that makes sense. Not 0.3%, because you're not going to extend your capital and you're going to grow it that well. So that's ready for risk averse. Risk averse is mainly to deal with you can't have the confidence to go into a trade. So what I advise is, there is my FX book, there is a load of trading journal websites, and just put it down on a piece of paper. If you can put down all of your trading charts and all of your analysis and all of your trading things, then you can see on a piece of paper how good you are. My FX book tells you your percentage wins to losses, how quick your trades are, if you lose them on for longer, do you lose your trades, all that stuff. And if you have all that stats in front of you, why not use it? So definitely I'd advise go to my FX book, put your broker on, and definitely go in that way, because then you have proof and you're like, oh yeah, I can do this. You definitely need more confidence, and that is the way to do it if you know you're profitable. So yeah, guys, that's for risk averse. So squad, we're getting to the big boy. This is the one which mainly I think gets the stats of, I'll try and put it up on the screen, but how many people and percentage wise on my broker that I use who fail. I think it's around the 76% mark, something like that, but I'll check. And I think the main reason for this is someone who is a risk taker. Now, this is not a bad thing, this is not a good thing. I think a lot of people have it in them. For example, I do. And I'll tell you about my life journey in another video. But risk taker is someone who is willing to take a high and dangerous risk of losing for a high gain of capital or a high gain of something, a goal. And due to the fact, obviously, people on Instagram and all these social media sites posting about their flash cars and flash Lambos and stuff, on a smaller account, you can feel to risk more because you have a small account and you know you can lose it. You're like, oh, it's only £100, £200. I'll just try and waste half it and try and get to £1,000, which is the stupidest mentality which I had at the start. But because you're surrounded by social media and you want to make that big gain, it's not the realistic thing. You're just trying to risk. And for example, the main thing which a lot of people, and you might agree with this, is, for example, you might be feeling calm that day. You do one trade, you lost it, right? And you over-risked a bit. So there's a lot of over-risking involved in this mentality. You're like, oh crap. So imagine if you had a £100 account and you just lost £13. You're like, oh crap, I just lost £13. Now, in a risk-averse mentality, which I spoke to my mate for, if he took a £13 loss, this person who's risk-averse, they'll normally get off the charts and be like, I don't want to touch it anymore. It makes you feel sick. Whereas on the other hand, for someone like me, I will look at that trade I just did. I've just lost £12. I won't even look at the charts anymore, and I would have put on the exact same position. For example, if I was in a sell in GJ and I just lost 10 pips, I would have put the exact same sell back on, and I would put it on double the lot size to try and make it up, right? And when I speak it on camera now, I'm like, oh my God, why did I do this? And I did this for numerous years, and which is surprising because people who have a bigger bank account could obviously, they can drill through that very quickly. So you over risk, you try and make up your losses by putting a bigger lot size on, and obviously you don't even look at the market, you don't even care, you're just hoping basically. It's just gambling. That's a straight fact of you're just gambling. And I think a lot of people relate to this, and that's not bad as long as you know now what you're actually doing. And that's the reason why I'm doing these videos, is to overcome these and how you can. So yeah, I'll be in a £12, just took a £12 loss, and I need to make that back up. I'll risk a 20, I'll put like a 0.2 lot on a £100 account, and then you'll just lose it again. It's just straight facts. No matter how many times you do it, you will lose it. It might be one time in 10 where it rips back up or whatever, but there's most time you are going to lose your money. And obviously, when you're in a smaller account, just for small account people, if you have a £200 account and you've just lost £20 of it, and then you're risking another 20, and you've lost 40, then you're like, mate, I've already lost like a fifth, fourth of this, a quarter of this account. I'm just going to put on another half of the account and see if I can make it all back. And then you just go, and then that's how you lose your account, basically. And it's a shame because a lot of people have these issues and we need to overcome them. So here's how I overcame this as being a risk taker. And so do a lot of my mates. So I'll tell you a lot of the different steps you can do. So here we go. So the first step of if you're a risk taker is to make sure that your account, so a lot of people have asked me on Instagram, like, stop loss matters, is your account leverage on 1 to 500? I'm like, no. Why would I ever have it on 1 to 500? There is not, somebody thought that the broker was going to give you money or something if it's 1 to 500, not to 1 to 10 or whatever. And this is where people go wrong. And I remember as a risk taker, when I was younger and stuff, I would try and decrease my loss, decrease my leverage. And this is what I do now, but now it's locked. You just keep it on. So I think I've got a 1 to 50 leverage, which means that you can't over leverage your account. For example, if I was risking, I would say it gets to 3% or 2% of my account and it gets to that level, it'll just cut them out straight away. Therefore, I can only, and these are on any positions. If I had all 100 positions open and it got up to more than 3% of my account, it would just cut them all out, okay? And this is to stop over leveraging. The only reason why over leveraging is because you want to flip an account, right? A lot of people do it, but there's no need. So put your leverage down to 1 to 50, 1 to 100, if that. It doesn't matter. 1 to 50, I'd say, is the best, right? And therefore, you know that this is the way to be. You're not going to over risk your account. And then you also know when you've got this and you're getting back into that mindset of, oh no, I need to make it back. When you log into your broker and try and change that leverage so you can risk more, you know for a fact you're going to lose more money. And you'll do this numerous times, but you'll realize that, wow, every single time I change my leverage, I lose more money, because you're in that mindset. This might not be to all people, but just people who are very, very gambler mindsets, like mine was. This is the thing. You'll see when you change your leverage, you'll go back and you'll risk all of it again, and you're like, nah. So you get into the fact of every time you go near that change leverage button, you're not going to go near it because you know, and you start to condition yourself. So that's the first step of what you should do. Change your leverage to 1 to 50, hands down, is the only way to do this. If you keep on 1 to 500, you're going to use it at one point and it's going to blow your account. The second piece of advice which I'd give to people, for if you're a risk taker and you're just struggling with your risk management, is normally when I had a really good week, Monday, Tuesday, Wednesday, Thursdays, I was banging, all blue, and Friday came. Friday to me is the devil day, and now I only risk half of my percentage normally, if that, on a Friday, because I know how much it's hurt me in the past, and therefore why don't you just get rid of it? It's all about probabilities. You know, I know probability wise I'm going to lose on a Friday, maybe. So and a high chance in most days. So I'm going to reduce my risk. So then therefore my days where I'm normally blue, they'll be not as impacted as the red on a Friday. Because when I was younger, I used to have really good blues all week, and then Friday I'd lose all of it. And that is the worst feeling ever. And you'll try and make them back, and etc. etc. What I said before, you'll just lose your account. So definitely Fridays, or whatever day you feel is not going well for you, definitely cut out. The next thing is also your time frames. Not your time frames, sorry, your sessions. Back test what sessions you can trade in your daytime and stop looking at the charts for 7,000 hours a day. But I'll go into more video about this. But yeah, stick to your hours and write them down, and if you don't stick to them, there needs to be a punishment. Get your girlfriend or something to be like, right, it's 9 a.m. now, you told me you trade until 8:30, get off now. Like, you need that. And then you get into a rhythm. It's just like going to school. If you're at work or whatever, at school, when you finish your job, do you stay there until 2 a.m. in the morning? No, you leave your job and you finished it. It's exactly the same here. When your sessions are over, you're out. Okay, get your pips and go. And the last thing I'd say for this video and the risk taker thing is keep your trades to 2 to 3 a day, or 1 to 3, or 0 to 3, because you don't have to take a trade each day. That's stupid. 0 to 3 trades a day, I'd say. Because for example, you might have one which you just got the wrong entry and then you re-enter. That's why. So I mainly mean 2. For me, I only do 2. And this means, you know for a fact, if you do your risk management properly and you only risk 1% per trade, your maximum loss in the day is 2%. But if you risk manage and you cut your losses, it's actually going to probably be 1.5% max. And that's from 2 losing trades, which if you know your probability wise in my FX book, you know if you have an 80% win rate, then you're going to do them odds all day, because if you cut them losses, you know your profitable ones are going to make some good money. So these are the main tips which I wanted to talk about in the first video. And obviously, so you need to get that level of not a risk taker and not a risk averse. You need to be risk neutral. You need to be able to know how much you're willing to risk and how comfortable you feel. And when you get to that comfortable level, you don't even look at the numbers. You're just thinking about the charts. And when you lose a trade, you're like, oh, that just wasn't my day. You come back the next day and you execute again, because you know the probability of winning. And this is why it's so important to journal your charts and get my FX book to show exactly where you're going wrong or where you're going right. And then it makes you comfortable with your trades. So yeah guys, I hope this video helped. It's a start off a psychology one. It's going to be one every week, and I'm going to smash out loads of stuff. I'm also going to do one about my personal journey here, which is obviously I'm just turned 20 and I've been doing this since I was 13. So I'll show you all of the tips and tricks that I've learned. But yeah, so make sure you find out who you are as a person. You know, are you risk averse and you need to, you know, risk a bit more because even though you're comfortable with your trades and you're doing well, you just need to risk a bit more, which is completely fine. And also, if you're a risk taker, be careful and take your time. And this is how it's going to be. So yeah, hope you enjoyed the first video, and we will be out next week for, I don't know which one I'm going to make next, but it's all good stuff. I want to keep the videos quite short, so here we go, guys. Like, comment, subscribe, and also go to my Instagram at Stop Loss Matters. I've got my affiliate broker there, which is IC Markets. Join on that link and they'll sort you out. It's tight spreads, all good stuff. And my Instagram, I do all my trades all day. I'm doing a £200 challenge at the moment, and they get £300 for a month. So come join that. All be in my bio and stuff on Instagram. So yeah, guys, hope you enjoyed the YouTube, and I'll see you in a minute. Stay safe and don't over risk. And remember, stop loss matters.